Hi. Basically, we're gonna get into ABS, what it is, how you can trade it, etc., etc. Okay, it's pretty simple. Like the perfect ABS model would look something like this first part right here. Okay, as you can see, this ABS is paired with a PDI, but I won't be explaining that right now, so I'll just leave this shit. As you can see, we are accumulating right before a major open. Doesn't always have to be a major candle open, but I just like it to be a major candle open so I can have some volatility when I'm trading, so I can be in and out really quick. So this would be, let's say, like fucking 9:30 a.m. Okay, so this would be New York. Goddamn, bro. New York Stock Exchange open. Okay, this would be New York Stock Exchange open. Okay, as you can see, we immediately break out of this zone. That would be the accumulation zone. We make a new high that was higher than this, so we make a new high. This would be the high, the starting point of a breaker block. We make a high, we retrace lower, most likely inside of OTE. As you can see, my drawing is perfect. It's inside of the OTE. We retrace to, we make a retest, we make a new low, we make a new swing low. So we make a swing high, then a swing low, and then we immediately after that make a swing high again, so a higher high. So that high has to be higher than the previous swing high that we just made. Ideally, you would want that higher high to tap into a higher time frame PDI. May that be a 15-minute, a 30-minute, a 5-minute, a 1 hour, 4 hour, daily. I don't fucking care, as long as it's a high time frame PDI. It makes a difference if the high time frame PDI is mitigated or not. If it's not mitigated, it's called a rebalance. If it's mitigated, it's just a fair value gap, or it doesn't even have to be a fair value gap, to be honest. It can be a breaker block, an already existing breaker block that has been respected multiple times, or a breaker block that hasn't been respected. It can be an order block. It can be any fucking ICT concept out there. It can be a mitigation block. I don't fucking care if there's a fucking, I don't know. It has to be a PDA, like a PDRA on the higher time frame, maybe the 15, 5, 30 minute, 1 hour, etc. Okay? If you want the A+++ setup, you would want to see a SMT like with the high, like the highest high. Doesn't matter if the SMT is with the like the recent swing high. Shit, the fuck is? Oh, never mind. Um, it doesn't matter if the SMT is with the previous swing high, the like the high, low, higher high. It just has to be an SMT with the higher high if you want it to be an A+++ setup. Okay, as you can see, price, this is an imaginary scenario, but price instantly respects the high time for PDI and it rejects it and we go down. Okay, for most people, it's gonna be the easiest and the most safe way like to do this is to wait for a inverse fair value gap on the C leg. I forgot to mark this out. This leg right here would be the A leg. This would be the B leg. This would be the B leg, this would be the C leg, and this would be the distribution, aka the D leg. Okay, it's pretty simple sauce, simple sugar. Want to remove this shit? Come on, can I remove this shit? That isn't what I wanted to do. Okay, pretty simple sugar. So this would be the A leg, this would be the B leg, and this would be the C leg, and finally the D leg. Okay. So for most people, you would want to wait for a inverse fair value gap to happen. The fair value gap should be on the C leg that gets inversed. And once you see a inverse fair value gap, it's like best to wait for the high time frame inverse, like for the high time frame fair value gap to get inversed, so that you can minimize like losing trades and maximize your win rate. No. You would enter at the inverse value gap and you would target the fib level. The fib levels are going to be placed on the B leg. So A leg, B leg. Okay, you want to place the fib levels on the B leg. What you can do as well is not target the fib levels. You can target other high time frame PDI rates, for example, unfilled 15, a break block that is on the lower side, equal highs, equal lows, data highs, data lows, lunch highs, data lunch lows, previous days highs, previous days lows. I don't fucking care as long as it's strong, as long as it's like a strong draw on liquidity. Okay. So in this case, you would have a you want to like target 2.5 standard deviation, or if you're looking to target a high time repeat array, you can do that as well. Especially if it aligns with the fib level. If the high time frame PDI aligns with the fib level, it's a strong confirmation that it's gonna cook. Pretty simple sugar. You can see the risk reward in this scenario is 5.68. You know, pretty simple. And the ticks, like your profit, your total profit, is way higher than it would be if you would have taken like the normal unicorn, which would like look like something that would look something like this. I don't fucking know. If you use inverses, you're gonna want to wait for an inverse. You tap into the break block. You're gonna wait for an inverse to get final confirmation. Okay, you place your stop loss at the most recent swing high. This would be a unicorn setup. You're gonna target the high time for repeater rate as below. In this scenario, it would be a 1 to 2.5 almost, and in this scenario, it would be a 1 to 5.68, which explains why I use this model. I have been focusing a lot on like bigger trades, more RR, instead of just small scalps, etc. As you can see, it's pretty obvious why someone would trade the ABS, especially if they know how like they would trade it in comparison to the normal unicorn setup. Okay, this is a ABS crash course. If you have like any questions, you can just ask me, and I will answer it. I'm not gonna look at journals, Juliano. I'm sorry. I'll do it later. Oh, ABS stands for, I don't know how the fuck you spell it. But, bro, I'm so fried. Antici. How do I spell anticipatory? Anticipatory. Huh? What is happening? Anticipatory breaker strategy. So it stands for anticipatory breaker strategy. The name speaks for itself. You're expecting a breaker block to form, so you enter before the breaker block even forms, so you can maximize those profit, maximize those points you cash, maximize those like the RR you cash, etc. This is pretty advanced. It is pretty advanced, but it is really worth it. Because as you can see, it just offers so much, like it offers so much RR, ticks to be won, etc. For the drawn liquidity, do you determine drawn liquidity before model shows up? No, I do that before I even like look for an ABS. I mark out my first I mark out my drawn liquidities. I look at like where are we playing? Are we playing in high time repeat areas, etc. And then I'm gonna look for a potential setup, my entry model. This is simply just an entry model. This is just my entry model. The rest is like determining where drawn liquidity is, etc. The one on your screen is right now is a combination of PDA and ABS. Yes, it is. I'm gonna get in PDA in just a second. So yeah. I missed your question. 1 second. Can you rewrite it? I can't click for some reason on your shit. on a message. Oh no, oh no. I'll just scroll up. What up? What situations do you not enter off an inverse value gap? Really depends. I almost never enter off of an inverse value gap if I am trading on my live account or something else. But in this case, in my backtesting session, I did, just because you guys are like used to inverse value gaps, and I just wanted to give something that would like seem similar to like the strategy you use. But most of the time I'll enter off of a rejection of an SMT and the fact that we are playing outside of the high time frame PDI. So for example, we have an SMT, we are sharply rejecting it. This is the high time frame PDI. If price has a like a convincing close below the or like outside of the high time frame PDI, so a convincing close outside of the high time frame PDI, I will enter that trade based on that. Also, this trade would make it really good if there was a turtle soup right here. So that's just something to keep in mind. If we sweep like some sort of session liquidity, lunch highs, lunch lows, if we sweep equal highs, equal lows, etc. PDA stands for PDRA. It's just any like fucking ICT concept. Yeah, you should always wait for more confirmation. What time frame do you want to see this model on? I exclusively trade on like 1 minute. I would, yeah, you should wait for more confirmation. In this case, it would be inverse parallel gap. If you want even more confirmation, but that would invalidate the ABS, it would just be a break of luck. You can wait for a break of structure here, but that wouldn't be an ABS anymore. That would be just a unicorn. Or if you have like internal lows here, you can wait for break structure there if you want extra confirmation, but I wouldn't recommend doing that. You consider a 5 minute high time repeater rate? I do. What time windows do you see these setups happening usually? They're happening even right now. But the most high probability ones are just in common kill zones. And the best kill zone, in my opinion, is the New York kill zone. No, I wasn't trying to say PDI. PDI and PDA are different things. What higher time frame do you use for PDAs? 5 minute, 15 minute, 30 minute, 1 hour. If I'm really desperate to find a PDA, I just look at a 4 hour. You'll never see me looking at the daily. I don't do inverse value gaps as much, but you should look for the highest time frame inverse value gap in the leg of the C leg. So, for example, let's imagine you have this fair value gap and you have this fair value gap. Okay. You have two fair value gaps in the C leg. You should look for another fair value gap that combines these two into one fair value gap. So, for example, let's say the 4 minute is one fair value gap and the inverse is right here. You should wait for the inverse to happen of the 4 minute fair value gap. It's still pretty good risk. So, you should always wait for the high time frame inverse fair value gap. You have a screenshot of trade issue with ABS? I do. I do have a lot. Do I want to look for it right now? No. You'll probably find it in my journal. I'm really sorry, Andy. You'll find it in my journal. I've done it. I've posted it multiple times. I think. Start posting in your 9-incher again? Nah. Too lazy for that shit. These strict trade ABS now? No, not really. But it's my most refined model. Right, drawn liquidity or time-based liquidities? Yeah, no. Equal highs, equal lows, pretty good as well. Imbalances, yeah, I mean, you could say that imbalances are price-based liquidity pools. Data highs, data lows, also time-based, but My drawn liquidity is pretty much equal highs, data lows, previous day's highs, session highs, lows, um, imbalances, and just higher time frame PDIs that could act as a drawn liquidity. Any other questions about ABS? How many trades do you typically take with ABS a day? I've recently stopped taking more than one trade a day. So I would say 1 to 2 trades a day, and it's most of the time it's ABS or PDI. How many cons average? 3 to 5 cons. I don't do 18, 20 cons anymore. It was just mentally draining for me to see such a volatile P&L. It ruined my risk management. I told y'all multiple times to not trade like me. Yeah, I did 30. I did that multiple times, bro. It was crazy, but it was mentally draining. Any other questions about ABS? 30 cons, yeah, not micros. Do you change dollar for ticks on your charts? Not anymore. I'm gonna spark this shit up and I'm gonna get into PDI. PDI is a really simple model. Fuck, my J fell out of my mouth. I'm gonna spark this shit up. I'm gonna get into PDI. And I am going to answer other questions, trading related questions. If you have any trading related questions. Where the fuck is my lighter? Where the fuck is my lighter, bro? I hate this shit. I just had this shit in my hands, bro. Fuck you mean another hit? This is another J, bro. Oh, there's my lighter. It's not my strat. It's a twist to Atonomics strats. Atonomics strat. So delicious. I've had the munchies for like 2 hours straight, but I was back testing. I'm explaining this shit right now. Yeah. What's your average win rate, RR? My average RR is like 2 to 3. It's most likely going to be 2.5, 3.1, something in that range. My win rate is 70 to 80%. It's awesome sauce. I did take one trade today. 2 p.m. short. I took the 2 p.m. short. Kill that thing in the background. It's my neighbors. That rooster, bro. It's fucking up your high. Bro, it's amazing. I haven't had this high in so long, bro. It's so chill. But I'm suffering right now, to be honest. Because I have the munchies. I've had the munchies for like an hour. What do you look for? What what do you look for when identifying your bias? I don't use daily bias, but I use what I do is I look where price is playing at the moment. I look for high time frame PDIs, etc. Like high time frame PDIs. If he just steps into a breaker block, we just steps into order block. We just type in the imbalance, and I just trade off of that. I trade very discretionarily. Lechi, you're not recording this? Oh, okay. Lechi, can you send that shit later? Yeah, can you send that shit and post it to like fucking streamable so I can post this shit in recordings? It's gonna be a long ass fucking video. Can I get paid? Nah, nigga. Fuck you. I'm not Patty. Fuck that shit. I'm not paying y'all. I'm gonna be do. I'm going to. Okay, PDI is pretty simple. So you have a lot of consolidation. Okay, let me draw this shit out. Okay, perfect. This is how I use PDI. So basically, we have consolidation. So PDI stands for hold up, pre-distribution inversion. Okay, PDI stands for pre-distribution inversion. It's pretty simple. It's based on the AMD model. What is the AMD model? It's accumulation manipulation and distribution. I don't know how the fuck to spell this shit. Okay, the AMD model is accumulation, manipulation, and distribution. As you can see, we manipulate for quite a while. So this is a consolidation zone. Then we manipulate and then we distribute higher up. Okay, it's a pretty simple model that Patrick uses. It's based on the AMD model. It's a pre-distribution inversion. So the goal of this model is simply just to catch the distribution move right before everyone else does. Okay, so how other people, at least how I've seen other people use it, if they don't know about PDI, it's pretty simple. They'll just wait for a break of structure, like break of structure, like a fucking break of structure of the accumulation zone. Okay, and then they'll wait for an inverse fair value gap or just for a fair value gap entry right after the break of structure. You can see here this could be another entry for the AMD model. So five steps back into the fair value gap. This would be a fair value gap, and then they'll just take this trade. Their stop loss would be here. They're quite literally like forced to do it here. It would barely be a 1-to-1. Okay, so the goal is to catch the distribution move before it even happens. Okay, so we accumulate, we manipulate, and then we distribute. There are a couple of key things to look at when you are trading this model. Okay, before the accumulation, it's important to look at if there is a major candle opening. Okay, if you are like looking at the charts and you're seeing that price is accumulating, you have two options. One option is like you have two scenarios. One scenario is like that we are pre-news, we have choppy market conditions, it's lunch hour, or something else, or you're just looking at Asia, like volatility. There's no volatility, there's no buying pressure, there's no selling pressure. It's just ranging into one direction. Okay. So you want to look if there is any kill zone opening or a major candle opening in the near future. As you can see in this scenario, we accumulate for quite a while, and then we have, for example, the 9:30 opening candle. 9:30 a.m. opening candle. Okay, this is not New York Stock Exchange open. This is the important things you have to notice before even before even considering to take a PDI. Okay, then we manipulate. I like to think of this as like in legs. This is, I mean, in ranges. This is the A range, this is B range, and this is the C range. So the accumulation range is the A range, manipulation range is the B range, and the distribution range is the C range. Okay. So we manipulate in this case down, and we manipulate into something significant. You can be taking PDIs without like trading into like manipulating if the manipulation move just happens in some random void without any like high time frame PD raise or just a session liquidity sweep, etc., or we tap into OTE. It's most likely going to be a losing trade. So what you want to look for is you want to look for if you want to look for like if the price is tapping into a high time frame PD array, if we just swap session liquidity, if you're tapping into order block, breaker block, etc., or if you're tapping into OTE. If that's the case, then most likely you're gonna see a sharp rejection off of the high time frame PD array. If you want to make it an A+++ setup, just like the ABS, you want to see a SMT paired with like the lowest point of the manipulation point, and you want to see like that shit getting respected. What your entry gonna be is gonna be an inversion. The strategy is called a pre-distribution inversion. So you're gonna look for an inverse fair value gap, just like the ABS. You're gonna look for the highest time frame inverse fair value gap. Okay, so if you have a couple of like inverse fair value gaps in one leg, you're gonna scale up to another time frame, a higher time frame. For example, if you have 3 inverse fair value gaps in the 1 minute, you're gonna have like 2 in a 3 minute and 1 in like I don't know the fucking 6 minute. Okay, you're gonna wait for that 6 minute to inverse and then you just enter. You don't blindly enter just because just because the inverse has happened. You need to know the context behind it. For example, if the 6 minute inverse happened and the like price is really high up, for example here, you're not going to take this trade. This is L risk. This is really bad risk. We have already taken internal lows, so this could be a losing trade. It's higher probability. It's like more likely than not that it's going to be a losing trade because we took internal highs, which is pretty strong liquidity in my opinion. So your targets should be, if your risk to reward allows it, should be accumulation highs, equal lows, internal highs, internal lows, and a high time frame PD rate as maybe your final like take profit. What I often do is I place my fib level on the manipulation leg of the accumulation zone. So, for example, we have accumulation here. Price manipulates down. I'll place my fib level on the price, like on the manipulation leg. As you can see, we have standard deviation -1, -1.5. We can just use those as targets. For example, in this example, I would target the 2 standard deviation if the high time frame PD rate align. Okay. That's pretty much what PDI is. It's a high win rate. It's a high win rate strategy if you know how to apply it correctly. And anyone has any questions about this shit about PDI? If you want more information about this, I didn't really go into depth, but if you want more information about this, you can look at Patty's recordings. They're really awesome sauce recordings. It's simple sugar. You can find it in like fucking recordings, spin videos. You'll find it there. He has like 2 videos. I don't know, part 1 and part 2. No questions about this shit? What about ABS? Already did ABS. My bedtime, nigga? Yeah, yes, sir. Good night, bro. Why is there a rooster in the back? I don't know, bro. No more questions? Because if so, I don't really have anything to do, but a friend is coming over and we're going to the countryside. I told him just to come over and we'll go after I complete this shit, but I don't. I just can't fucking. I can say with you guys if you want to yap about something, about life or trading. I don't care. Yeah, that's basically PDI. Yeah, I'm in Tunisia right now. Come on, bro. Yeah, it's going off right now. Just got done backtesting on your own. Just keep trying. Just keep pushing, bro. I'm gonna ask. I don't use Instagram. I've deleted all social media except for TikTok quite a while ago. I didn't meet my girl. I met her, I don't know, fucking 7 years ago, 6 years ago. I was like, at school, we were like classmates back then. I was plotting for 7 years. Like, the moment I saw that bitch, I was like, I need to get that shit. She was beautiful. She still is beautiful. And she has a fat ass, bro. Oh, damn. And she's Asian. And she can cook. And she has fat lips. Yeah, I love that bitch. Type shit. And she has black hair as well. And she smells so nice. Bro, she's literally perfect. I don't care. Do a squirt? No, she on a. Why did I answer that shit so quick? Just got engaged. Congrats, man. Hey, bro, I'm not gonna answer that shit. Can't wait to get back. We're gonna meet up in Vietnam, though. She's not from Vietnam, bro. She's from the Netherlands, but I'm going to Vietnam and she's going there as well. She's Japanese. Are near to Paris, bro. I'm like 3,000 kilometers away from Paris right now. Tilly's in Paris. I have been to the States. I do fuck with house music.
But honestly, I don't listen to house music a lot anymore. Um, Honestly, I just listen to like a lot of J. Cole recently and just calm piano music. Have I been to Switzerland? Yeah, I want to move to Switzerland, but I don't really know if I want to. J. Cole's house music. That's good. I do have watches. My favorite one, my favorite one is my Che Santos. Fave country you visited? Honestly, Tenerife, bro. It was so like it was so I don't know how to explain it. Tenerife is Spain. For the guys who don't know that, Tenerife is Spain, but Tenerife is like an island next to Morocco that is part of Spain. It's a Spanish territory. I'm not Moroccan. No.